One of the big undercurrents I found at the Ideas Festival in Aspen, Colorado this week, concerns over government policy. And the watchword is uncertainty. Chris Hyzy has been outspoken on this issue, and he's with us now from Aspen. Chris is the Chief Investment Officer at Bank of America's U.S. Trust Division, a private wealth manager that oversees $183 billion. Chris, thanks for getting up early. I know it's still a bit dark in Aspen, but let's start on this issue of uncertainty. What is it that you're concerned about? Where do you not see clarity on government policy?
No, there's really no clarity in any aspect, whether you're talking about regulatory policy, the midterm elections, which way the administration is going to go regarding the future of the energy policy. There's a lot of uncertainty out there. It's very similar to where we were a year and a half ago as it relates to uncertainty and non-transparency. But if you could kind of think about the next 6 to 12 months, we're going to get a lot of answers. Some of the answers we're not going to like, but at least the markets will get answers. And what we'll see from there is an improvement factor in earnings, and the profit cycle, the jobs picture. And we should stop these soft patches that we're seeing like this summer and head a little bit higher on these equity indices. And our belief still close to 1250, maybe even 1300 if we do get a wave by the end of the year. But it's all going to be about profits. It's all going to be about the jobs picture. And until the fall, we're going to have a little bit of less clarity on that as well.
Chris, I was going to ask you this question, but you almost answered it for me already. Putting a price on uncertainty, is that the price for uncertainty, 240 points on the S&P 500?
Well, you got to take a look at multiples for a second, Eric, right? We're trading at about 12.5, maybe 12 times forward earnings. That is about 20 to 25% lower than the average of somewhere around 15 times. When you look at the world, the same thing. It's about 20% below its long-term averages. That doesn't necessarily mean we're going to erase that gap. We will erase that gap if earnings come back. So the 2 to 240 points that I mentioned could be erased really quickly if we see those earnings come through.
Chris, one thing the market seems to be fairly certain about are the prospects for inflation. Treasuries are trading, 10-year Treasuries trading again at a sub 3% yield this morning. How long do you think this Treasury rally can last?
Well, you know, it's pretty much hit its point here in the near term. The yield curve has flattened a little bit here. As you mentioned, the 10 years come down somewhere around 2.887, somewhere around there. If you think about the next 10 years, what would you rather own? A U.S. company, multinational, global company with exposure to the emerging markets, free cash flow 7% or higher with a really good dividend, or a 10-year Treasury bond paying you out at 2.8%? I'd put the dice on the U.S. company that's going to take advantage of this transition from growth in the U.S. consumer to the emerging market consumer. So Treasury yields right now, they're screaming deflation. Bernanke knows this. The central banks around the world know this. And that's why we continue to believe that reflation will be around for a very long period of time, keeping short rates around 0% for a very long period of time.
Chris, what kinds of products are your private banking clients asking for right now?
It's still all about safety. There's a lot of concern out there. We've seen it now for a better part of 2 years. There was some enthusiasm. Obviously, March of '09, fear was running rampant. Probably around the summer months, we started to see a shift. And then into this year, around the April highs, we saw some very large equity inflows, not just at our company, but overall in the industry. What we're working off of right now is negative equity inflows again. And if you take a look over the last 10 years, it's no surprise that actually stocks have underperformed bonds. And we're thinking over the next 5 to 10 years that is going to reverse itself due to this transition. But in terms of the safety aspect, still very conservative, low duration, fixed income, high cash balances. We have to keep those high cash balances to the side through the summer, but be very opportunistic and invest in this profit cycle that we see coming.
All right, Chris, thanks very much for the investing advice. That is Chris Hyzy, Chief Investment Officer of U.S. Trust.